Is Satispay still a unicorn? Well, at the end of the day, who really cares? Up to now, Satispay raised about $500 million year to date. They have about 5 million users, about 650 employees, with 380,000 merchants just in Italy using the app. Only one of the few companies being able to attract some of the bigger international investors.
That sounds like the wrong question. If the round is a new side round, such as this one, valuation doesn't really matter.
Saying now that they've been operating at a loss, therefore it's not a unicorn, it's a bad company, they're going to crash, etc. It's very premature and very myopic. Given your latest number from your own dashboard, and I encourage people to take a look, we might hit 1 billion this very week. So last week, Nicolo's calculation regarding basically all the fundraising, focusing on equity, hit, and correct me if I'm wrong, about 998 million euro for Italy. So great news. So we might expect the hit of 1 billion, despite what other reports have said. It's gonna happen this year, this week, pretty much. Yeah. What's your hot take on this?
Well, I was looking forward to this. Probably we had this conversation several times, so that we needed some relevant round in order to hit the 1 billion mark, and maybe go a little bit beyond that. And this was the week where we had the good news coming out. So this is nice. The flip side, of course, is that that number is so low. 1 billion is still so low if you think about market. So it's nice. That's a psychological result, but we are still hitting well below our weight, and this still saddens me in some sense. But hey, we got there at least.
We got there,
So
exactly. I agree.
So what do you think about the end of the year? So are we gonna hit 1.2?
Oh,
1.1?
That's a good question. 1.2, I think, is pretty positive.
Stretch goal.
I think so. I think we're not gonna hit another 100 million for the month of December. I mean, December is pretty slow. Take that half of it is pretty much gone. So we have a month. De facto, we have a month. So I think that's it, man. I think that's it for now. This year, it's around that.
Let's look forward to at least another good, Series B-ish round, and probably that's it. Okay, I'm following. Let's see.
Good point.
I'm still optimist.
Awesome. All right, let's move to the big news from last week, starting from Satispay. Payment tech startup, of course, raising 60 million euro in a round participated by existing investor, addition Greyhound Capital and Lightrock. So very interesting round. We cannot ignore what Satispay has been doing and is doing actually for the tech ecosystem. So very, very interesting company. Controversial. Some people love it. Some people hate them. Let's bring up some points and see exactly, maybe what new information we can derive from all the press and all the information that we might take. So starting from actually the overall pictures. So up to now, Satispay raised about €500 million year to date. They have about 5 million users, about 650 employees, with 380,000 merchants just in Italy using the app. So it's a pretty solid results, very powerful, considering that, and just to give some perspective, the first year Satispay started with about 50,000 users, mostly focusing on an app basically focused on corporate benefits and then the first sort of transaction. And now we have this giant company, or a giant in the making, which predicted that pretty much is going to do investment services by next year. So a lot of things going on, a lot of good results. Definitely historically, very performative, very interesting, and a good example of a very high growth company. What's your take on this, Nick?
Yeah, I agree with you. I mean, they started out with a very bold goal to create a brand new payment network outside of the standard network, like such as Visa, Mastercard, bankomats. And in Italy was not easy fit because I mean we are still smaller market uh, where digital payments see a lot of actors all fighting each other to be in the point of sale of the merchant. And building a 5 million big user base and most importantly almost 400,000 merchants. That's a very nice place to I mean probably to start because they for sure they worked to date in order to build the network. And from the latest news, it seems that they're starting to think about how to monetize and leverage the network. But I think we'll get back to this later. Um, so, not an easy goal that I think it required time. So they've been around for a while, right? So they started 10 years ago,
About 10 years, yes.
about 10 years ago. Hmm. So not obvious to build such a network.
Yeah, let's talk really quick about the investment, the pool of investors. So, what is interesting about over the years, basically, Satispay had probably only one of the few companies being able to attract some of the bigger international investors. So definitely kudos to them, and it's a good example. Let's maybe bring up like what is the cap table looks like, just to give you an idea. Essentially, the first one sort of being noticeable is Addition. So Addition is essentially a fund, US based, from one of the former Tiger Global partners, Mr. Lee Jared Fixel, which has right now 18.94 roughly shares of Satispay. So yeah, definitely a big investor, not only basically a tech investor. They've been backing though like great companies in the tech space, so definitely like someone extremely powerful to have on the cap table. Moving on, Greyhound Capital Partners 3, so that will be the third fund, having pretty much like around 6% of the shareholding of Satispay. What is Greyhound Capital is noticeable for having invested in fintech companies like Revolut and N26. So again, like another very strategic investor for the fintech sector. Finally, Lightrock, about 7.7% ownership, Luxembourg-based, another like investor that was in the previous round and like sort of doubling down, including also the current investors in the cap table, including Tencent, 6.2%, and a small percentage with Mediolanum, 2.6%, plus a bunch of smaller investors. So powerful cap table, international breadth, very powerful for what's next for the companies as well. So very strategic. This is like a few rounds ago when we saw like a few cap tables that were really well crafted. This is very, very carefully selected. Very good impression then.
Yeah, agree. I think what is interesting from the round is that they in this investment they kind of re-equilibrated at least the voting part of the shares. So the farmers got some multiple voting, super voting shares in this deal um, because probably they got kind of diluted by raising so much capital, also at increasing valuation. And that's interesting, right? So that's
Absolutely.
yeah, at least important recognition of the importance of the founders having the say on the direction of the company. So that's this the investors giving some kind of this recognition. I mean, again, I mean that's I take it in this way. I don't know what you think.
Yeah, totally agree. And it's one of the, I think, very interesting points. So I think overall, the founders only have roughly like 30%. Well, not even. I don't think they reached the 30% of the shareholding of the company. But basically, what they changed in the last round is moving voting rights from 3 to 5. So right now they do have 50%, more than 50%, that will allow them to essentially control the company. Great news, great strategy, and that actually gives a strong signal from the investor side on the confidence for the founders. So it's a huge sign, honestly, when such big change in governance happen. I take it as a very, very positive sign for the company. Yeah.
Mm-hmm.
Yeah, awesome. There's been some controversies on Satispay, which I think are worth mentioning. So a few people have been commenting about performance metrics and so on, and it's worth maybe mentioning a few just to see exactly what's going on and how potentially we can argue and counter argue the other side. So first of all, the big question is Satispay still a unicorn after 10 years of activity without really breaking a profit? So what's your take on this, Nick?
I have to say, honestly, that sounds like the wrong question. I mean, this is a part of the conversation that I find kind of boring. I mean, uh, being a unicorn is just a matter of valuation. There's a point in time when if you're very good, someone says, "Hey, you're worth a billion in the private market." And then maybe you're not anymore, or you are even more. We don't know in this round. So that's mostly non-interesting question. That's what I would say in this conversation. Maybe they're not anymore because this might be a down round, or maybe this is an up round, and still someone double down on believing in them. I have to say, from the formal point of view, if the round is an inside round such as this one, then valuation doesn't really matter. Be it a down round and up rounds, there is no third party coming in and setting a price. So if you want to take a look at the formal side of the equation, it's even less relevant in terms of question if related to this round. This is my take.
I agree. Who cares about unicorn status? I mean, at the end of the day, I agree with you. It's a matter of like internal negotiation, and what matters is really like the growth of the company and how basically they're gonna plan to monetize in the future. So I think I agree with you. That's the real question at the end of the day. Regarding the time frame, some people argue that the average company, the average startup start to becoming profitable after 3 to 5 years, breaking a profit, etc., etc. Well, overall, that's correct. I think it's definitely not a rule. It depends too much on the kind of business. First of all, that founders are developing, and secondly, on the kind of plan of growth that they have. Clearly, Satispay is like big in investing in growth, and if that's the strategy, I mean, that rule doesn't apply. So honestly, time frame is very like a very such a simplification, probably, I would say. Yeah.
Yeah, I find it interesting. So there are some, conversation around what is a startup, what is a unicorn, when you stop being a startup. I mean, I don't find this conversation particularly interesting, particularly related to grown-up companies. So that's, whether it is a startup or not a startup is not particularly relevant anymore. It is much more important what will happen going forward. But I find it is interesting, conversation around, is Bendy Spoon a startup? No, because they never run a loss. They've always been profitable. Fine. Is Satispay still a startup? No, because they've never broken a profit. I mean,
I agree.
so if these are the contents of the conversation, is the conversation relevant? Not really. The point is, Blending Spoon, great company, profitable, growing like crazy, huge. Satispay, not profitable ever, will it be profitable? Maybe, hopefully, because we really believe in what they're doing, or you can believe they will not never be profitable, and they will just be sold for pennies on the dollar in a couple of years. I don't know. That's something that you can believe. Um, but I wouldn't talk about labels. I would look at the numbers, and these are interesting, right? So as you were saying, they've been running at a loss since the beginning, but they've been building a network, not selling shoes on the market. And building a network in the payment system, that's expensive in today's world. So I'm not surprised at all that they've been burning money. Kudos to the investor who believed they could build a network, and they're still believing they can complete building this network and start monetizing it later on going forward. So, I'm not surprised at all by the burn rate because of what they're doing.
Yeah,
And
to give
look at
some
the top line.
context. Yeah, let's do that.
Please.
Let's look at the top line and the bottom line. So just to give some data to the listener, 2020 revenue about 4 million, 2021 6.3 million, with the cost up to 32 million. So we start seeing the gap here. 2022 about 60 million loss. 2023 revenue about 28 million with about 46.3 million loss. 2024 we have a projection of 45 million in revenue with a predicted loss of about 55, which let me open here like a small aside. The loss was interestingly, of course, approved. It's bilancio approvato, it's an approved income statement since the beginning of the year. So saying now that they've been operating at a loss, therefore it's not a unicorn, it's a bad company, they're going to crash, etc. Well, it's very premature and very myopic, I would say. So, there is definitely a plan. These sophisticated investors understand what it takes, as you say, both to build a network and also to reach exponentiality in revenues, because that's really what they're aiming at. Revenues are moving, as you mentioned, fast. They're hitting 2 times, 3 times, 4 times in this curve that actually is gonna obliterate all the losses that they've been incurring, and that's, I think, the plan. So maybe that's the way to look at this situation instead of just focusing on unicorn status, startup loss, whatever. Let's look at the numbers. Let's talk about the growth.
Yeah, I agree. I'm not disregarding the fact that they're running at a loss and the loss is, heavy, but I don't know the plan. So I don't know the economics. I don't know the details of those numbers. So looking from an external viewer, which analyzes the company in a vacuum without thinking about external interventions and whatever is in their mind going forward, that can look bad. And so I agree, but I think, and this comes back to the original question, you should have looked at them as a mature company, as a mature company with limited access to resources that can support or sustain a recovery, a turnaround, some growth. They are still operating in a certain territory from a certain point of view, and they are deploying capital to still prove something. Does this make them a startup? Probably more than other signals that we talked about so far. But the top line growth, I think, is quite good. If you think the number of zeros that they add every year, they are adding every year. And then there's, from the article, the plan going forward, right? I know you had something in mind on this.
100%. Go ahead, because you're excited about it.
Well, I find it interesting what they're doing. In a sense, they started building out a payment network. I know they are expanding. You can see them in welfare, in food tickets. So they are expanding the town in a sense. And in the article, Dalmasso, the founder, is quoted saying that since they're seeing that people are using the app as a way to save, to set money aside, they want to expand into investment products. And that's, another multiple time expansion. And that's interesting because they grew in a world where interest rates were zero. So we were having this conversation. So this is not mine. This is Jack's observation. Today that word is not here anymore. So there are interest rates. So people are, have a lot of alternatives to set aside money to generate some returns, to catch some interest rates and accumulate capital. So expanding into more services is a way to attract more capital, more patient capital. And that's doubly interesting. So they're getting more similar and more similar to a kind of a bank in some way. And you can see other players worldwide moving in the same direction.
Awesome.
Thinking of Revolut in part, but the difference is that Satispay started out from a completely different place, being a completely
totally
separated payment network.
Yeah, one interesting insight that Dalmasso was mentioning is that 1 out of 5 users are actually saving money in the app. So there is this behavior which is really tying into what you were saying, which is, people are getting used to it, they use it, and they go beyond. So they're saving money there. So, it makes perfect sense to actually build around this idea. So they have 5 million users. They estimate that 1 million user is actually, leaving money there essentially. So there you go. There you go. Your metric and your tuition. Yeah.
And that's interesting, right? So they started making money in some way with the merchants, then they started making money in some way with the flow of money, so payments. And then they're adding, ways to make money from the presence of capital. So they're expanding the revenue lines. It might not work, but it makes sense.
Totally agree. Very interesting. So let's raise one last point, which may actually kind of counter this specific point. There has been some interesting argument talking about why people onboarded Satispay back in 2020. So in 2022, basically Satispay reached unicorn status, and some people argue that it was because, or at least it was partially or pushed because interest rates were zero. People were not moving money around. The barrier to actually deposit money and was low. No incentive to move money around. So basically, they got this big spike in user and hence the unicorn status. Now, the European Central Bank since 2022 has been constantly raising rates. Maybe investors, probably investors will use money and deploy it in different tools, in different asset classes, in deposits that bear interest. So there is an argument saying, that's going to be a break to Satispay development. Interesting point. I think it's fair. I don't think how powerful that would be, especially regarding what we said before. At the end of the day, being on the platform, offering investment product, there is no incentive to counter this element. And so not necessarily overflow or dropping from the app. So curious, very good correlation. Not sure how powerful that is going to be. Yeah.
Well, I agree with you. I don't know. There are arguments here that could be made. The unicorn status is, I think not relevant for us. It's probably relevant for the investors and the price they paid when they got in, and the opportunity to exit with a reasonable multiple sometime in the future based on the plan. It is true that outside of in startup land and technology land of today, outside of the craziness around generative AI, multiples are not great. So maybe the unique status in 2021, 2022, it was on average generous on the basic metrics. Might be more challenging today. And that's a matter of the price they paid and the price they will get in selling sometime down the road. So that's true. Is it relevant in terms of will they make a sustainable business? I don't know. There's some, um, light correlation maybe there. But so there is a relevant argument here for the investors about how much generous was the multiple back in 2022, and that I don't know with respect to the future. I mean, if Satispay takes over Europe, I think it was a bear game. If Satispay stops sometime between here and taking over Europe, maybe not, but still, the answer stays in the future. I think, not in the past.
No, I agree completely. Very interesting, definitely very interesting situation to see developing and see how exactly they're gonna do from here moving forward. All right, let's also mention like a few other news from last week. I think one that is like definitely worth mentioning is Restorative Neurotechnologies, startup developing solution for cognitive rehabilitation, raising 4 million euro in a round led by Fondazione Enea Tech, and with the participation with CDP Venture Capital, YAG, and Partecipazioni. So quite a substantial round. The company basically is a university spin-off, and it's focusing on non-invasive cognitive therapies for different diseases, especially neurodegenerative disease. Very interesting take, definitely like a very interesting application. What's your take on this one, Nick?
Not my area of expertise still, but what I find interesting is the Fondazione Enea Tech leading the round. Enea Tech has a troubled history back 2 years ago. It was supposed to raise quite a big amount of capital and start investing across verticals, and then it was stopped before starting, even though the team was assembled and there were people that were ready to start investing. There were term sheets, there were conversations, and then the government kind of reshuffled the way they were going to manage investments and capital and concentrating into CDP. But they left Fondazione Enea Tech with the allocation for biotech. And you don't hear about them very often, but here they are leading this round, and that's interesting further. I think they're still managing quite a bit amount of money with the goal of investing in biotech. So
awesome.
I think it is interesting to see that they're still alive and kicking.
Absolutely, and on top of that, what caught my attention was really the fact that given a lot of effort for CDP to actually invest in the south of Italy, this might be one of the first flowering and signs that all this investment is like going in the right direction. So the company is definitely has a good projections and is offering like a very interesting product and technology, and the round is not small for Italy for sure. So maybe that's how we're starting seeing more and more like companies from the south, basically helping raise the bar for people relocating in the south of Italy. So that's a good sign for sure.
Yep.
All right, let's quickly talk about what's happening in Primo. Recent news, you guys basically launched a private equity part of the business. It's a private equity fund focusing on health tech with a completely new team with a lot of like expertise in the sector. And on top of that, since you guys now you're dealing with venture and the private equity, it was a due change in name from Primo Venture to Primo Capital.
We are trying to grow in some way as a company, as all companies do. So we started out in 2016 with a small digital fund and a lot of dreams. And I think that today we kind of understood where we stand and what we want to do, how to build a sustainable and growing company. And Primo Capital is the real first step in that direction. So we are trying basically to build an investment platform. So the basic idea is there are many sectors, or there are many opportunities of investment in these sectors and in these opportunities. We think you need talent, expertise, and dedication. And in order to offer a full suite of product in the technology sector, we started launching different funds in different verticals and at different stages. So we started with digital, seed stage, early stage. Then we added space. Then we added climate tech. And now we launched the private equity health tech, medical devices health tech. And this is a way to diversify, learn, and offer a full suite of products to the market, allowing them to invest in different technological verticals that we believe will be shaping the future. So software is obvious, but the other, are all coming in. And we believe there are plenty of opportunities starting from Italy to become an important firm, at least Europe-wise, if not more.
So it's a pan-European, the idea is to become a pan-European investment platform, really. And this is like the natural step to actually start moving on different sectors, first of all, and also in different asset classes. So it's a pretty bold move, very interestingly, absolutely.
Yeah, but again, as I'm saying, this is the first step in that direction, so we are not there yet. But it's probably natural. I mean, you that's probably the next natural step is start thinking of the firm as a true international player. Today we are just operating also abroad and investing abroad, but still not full force. So
awesome.
We'll see going forward if we can manage that growth step. But it's been a fun ride so far.